Abitibi Metals recently secured the B26 project in Quebec, and since then, this has been one of the most exciting venture exploration stocks over the past 5 months. And CEO Jon Deluce is here to tell us the story and make sure everyone is up to speed on where it's at and what the plans and expectations are for the coming months and years. I'm Martin Gago with Market Radius Research. It's Tuesday, March the 26th. Please remember, this is neither recommendation nor investment advice. We're here to learn about the company. Jon, welcome, and thank you very much for joining us. I'm very interested in learning more about the story. I am a shareholder, having participated in one of your recent financings. You're going to give us an overview on the company, but first, I'd love to hear how you came upon this project.
Yeah, thanks for having me today, Martin, and appreciate everybody's time to learn about our exciting story at Abitibi. I founded the company and brought it public in March of 2020. And in March of 2021, we optioned our original flagship asset off of Wallbridge Mining in the Sal Bay Lower Detour Gold Camp. So that's how we became aware of this opportunity. The Beschefer Gold Project is 7 kilometers away from the B26 deposit, and especially with how we've had a tougher junior mining market and gold market over the past year to 2 years. Operating in that camp, we recognized the opportunity that we did have in a tough market, and that was the opportunity to pick up assets at discount pricing while the market was soft. So we knew of the B26 deposit as we've been operating in that camp for over 2 years now, and really we reviewed 10 plus assets and landed on what we think is a company making asset at B26, and very fortunate that SOQUEM gave us the opportunity to option the project. And now at the closing of our open financing that's fully allocated, we will be fully financed to earn 80% of the assets. So we've accomplished a lot in 5 months. And as I said, we're very grateful for the opportunity that SOQUEM has given us to develop what I think is a very key asset in the Abitibi. So that's, I guess, a very quick summary of how we knew of the asset, our history within that camp, and really just scratching the surface of why we're excited about what we're doing at B26.
Makes sense. Who is SOQUEM? Like for those of us who don't know.
Yeah, so SOQUEM is a private company that's financed by Investment Quebec. So this is a government financed entity that is developing prospects within the province of Quebec. They're very strong operators, have a very good systematic technical exploration expertise, and really the strength of their team has allowed us to option this asset and very quickly get into what is now 3 drills operating at the project. So we've gone from optioning this project on November 16th to financing $15 million with no warrants in December, and shifting gears right into two and now 3 drill program in Q1. And we've only been able to do that because of the strength of the database and work that SOQUEM has done. So really the best partners you could ask in the best jurisdiction in Canada.
Well, and then as well, I think as the project hopefully progresses well, that like the government of Quebec is a stakeholder in it. They're be positively biased, all things considered, towards the project, and there would be general support for it, and as well as Quebec being a great mining jurisdiction, regardless.
Yeah, exactly. I think it's the best partners we could ask for, especially within the jurisdiction that is so strong overall within mining, whether that's support from the government, partnerships with the First Nations, refunds on hard money invested in exploration. It's just some of the many reasons why we're excited to be here, and we really decided to build a company that's focused in Quebec.
All right, well, let's get on to the show here.
Yeah. Yeah, so we'll be making some forward-looking statements in today's presentation. So jumping right into it, and as I mentioned, we're very fortunate to be the first public company to highlight and really see the value of the B26 deposit for what's there today, and what we have started in an aggressive exploration program to develop and highlight the growth potential from here onwards. So as I mentioned, I gave a bit of the timeline. So we were able to complete $50 million of financing in December with no warrants. And as of the close next week, we would have raised roughly $20 million that fully finances this option agreement that had a 7-year term and 2 years. So really a huge accomplishment for the company, and really a testament, I think, of both the asset and the strong support that we have from our shareholders in what is still a very tough market. So I think we've been able to really accelerate and position in a tougher market, but really we're setting the stage for what we think is a very strong copper and commodity market that I think assets and opportunities like B26 will really stand out, given the demand for critical metals, and especially in a jurisdiction like Quebec. So looking at the resource, SOCOM and SGS published the 2018 resource, which was based on 115,000 meters of drilling. That resulted in an indicated resource of 6.97 million tons at 3% copper equivalent, and inferred of 4.4 at just under 3% copper equivalent as well. And to note, the grade on the copper and gold has picked up in the inferred category, supporting that the grade has been increasing at the boundaries of the deposit, with 2% copper and 1.07 grams per ton gold. So as you can see, very strong historical intercepts. These are distributed across the deposit and isn't hosted in one single lens. So it's a lot of strength within this deposit. We've outlaid a very strong multi-phased approach of exploration this year, and I'll get into that a bit more shortly. And really, as I mentioned earlier, we have the Beschefer Gold Project, which is how we first entered into the camp, and is a strong complementary asset to B26. So looking at the cap structure, still very tightly structured, strong shareholders at 98 million shares outstanding, with no warrant overhang in the stock. And as of today, we have $13 million in the treasury.
And just sorry, with your treasury and your fundraising, you mentioned it before. So essentially, you're going to be cashed up enough to fulfill the entire option agreement, and instead of taking 7 years, you should be able to get it done in 2 years.
Yeah, exactly. And we think that will be strategic. That could open up other opportunities for the company, being in a position of strength to complete this option without any uncertainty, but also be a strong junior in what is still a tough overall market. So we think that having this fully funded now could open up some strategic opportunities. And we also wanted to get ahead of we were able to set strong pricing. There's a potential next month for changes within the federal budget that could reduce the premium on charity flow through. So these are all reasons why we thought the timing was right. Clear out the option agreement, have continued support from our strategic shareholders that financed us in December. I think really helps speak to the strength of the asset, and also us being early on in the delivery of our plans that we set out for this year.
All right.
And I guess a bit of just for those that don't know, myself and our group, we're a family office that's diversified across the airline, mining, and real estate spaces. And we pride ourselves on having a very high percentage of our annual budgets go into the ground and operating the company very cost efficiently, as seen by drilling at B26 at $250 a meter all in, which I think is extremely competitive compared to our competitors in the camp and in the region. So it's really a mandate of what came together and founding Abitibi Metals, and I think part of why we've been able to build up a lot of credibility and been granted the opportunity to develop the B26 deposit. But yeah, I guess looking just for a minute on why B26, why Quebec, why is this opportunity so crucial at the present time? So really, there isn't a lot of polymetallic deposits in Canada, and I think that especially with the upcoming copper shortages and the increasing demand for domestic supply, the deposits such as B26, I think, will really command a premium today, but also in the market that's coming with where we project gold, commodity, and precious metal prices over the coming years. So we think we're really at the start of really highlighting a significant asset and there being more of a rush and need for that exposure within Canada and especially Quebec. So looking at the area and where we're operating, so we're in the northern Abitibi. So we have the B26 deposit, 7 kilometers to the northeast is Beschefer, and 7 kilometers to the northwest of B26 is the Salbay mine. And the Salbay mine is significant in the fact that it was a similar polymetallic deposit that produced 53 million tons of polymetallic ore over 20 years of production. So it's a good example how these deposits are deep-seated and have large growth potential. Salbay had strong recoveries, and we're able to benefit from some of that mining infrastructure still being in place today. We have an active power line that runs through the project. We have an all-year access road, and it's still quite well located in comparison to Matagami, Lassar to the southwest, and the mill at Casa Berardi and the infrastructure in Matagami. So overall, well located, good starting infrastructure, and we have the history of a nearby deposit that had very strong growth potential, went into production around 20 million tons and more than doubled that once in production with the combination of an open pit and underground at the Salbay mine.
Jon, how many months a year can you explore and drill on the property?
So we can drill there all year, so we won't have any restrictions. It's a bit more cost efficient to drill there in the winter, but it's we won't be restricted, and we'll likely have take a break for the melt breakup at some point in April, but then we'll likely be back with one drill for the remainder of the year.
Okay.
And so yeah, this zooms in on where the two projects are located between Beschefer and B26. So I guess yeah, the deposit is broken down there. And as I mentioned, the Salbay mine is to the northwest. And really we have about a 5-kilometer trend between the Salbay mine and the B26 deposit that is largely unexplored. And really previous exploration has been limited by the amounts of overburden within the camp, but we do have a new thesis that we'll outline over the coming weeks and months, looking at the property packages of a whole and what our plan would be to make the next B26 discovery along this trend, which we do think has a potential to have another discovery within this area. But looking at the B26 deposit specifically in our plans for the quarter, and as of today, we've completed about 10,800 meters as part of that maiden program that we started in mid-January. So I'll comment on our drill program next, but I'll just first start with the resource and how that connects in with our Q1 drill strategy. So really looking at the 2018 resource and some of the opportunities for improvement that we see. So the original resource was pretty much solely an underground model deposit, and that made sense given where commodity prices were, the cutoffs used at the time, and also the fact that this is a high-grade vertical deposit as of today. But one of the things that we wanted to revisit and test in this Q1 drill program is there the potential for this to have a bulk tonnage open pit shell to complement what is a high-grade underground resource as of today. So as a result of that, and some of the comments by SGS in their resource, they had identified about 8,000 to 10,000 meters of historical drilling they had felt within disseminated mineralized corridors that hadn't been assayed historically. So that's somewhere we have to go back to assay that additional core to really look at the low-grade potential around this high-grade core. So in addition to that, we did plan a good percentage of our program this quarter to test the north bedrock interface and the extensions of that high-grade core up to surface to the north, so that we can test whether or not there is a serious potential to complement this high-grade target with a lower-grade disseminated bulk tonnage target. So really, our drill thesis for this quarter is focused on the first 300 meters vertical, because we took a step back and say, where can we produce value cost efficiently for investors? And we believe that this quarter, starting with the first 300 meters vertical spread out amongst various objectives, was important in meeting that objective. So really, this Q1 program, as I said, first 300 meters vertical spread out amongst different objectives. First, testing the Western Satellite target, which, as we've mentioned in our press release, highlighted by hole 335, a 500-meter step out from the central section of the deposit, where we've seen quite strong visuals, an upper VMS lens with a lower Calco zone that we're excited to get the results back and highlight to the market. We're also testing, the third drill was brought on to test the eastern lens, which is broken up in the model. We're looking to infill a gap between two lenses today, and that's where we see the highest metal factor intercept historically on the project. Third initiative is to infill some gaps within the model. This was drilled historically on 50-meter centers, so there's more definition drilling that we need to do around the high-grade pockets of the deposit, like we saw in hole 294, which we released, that had a core of around 11% copper equivalent over 10 meters amongst a lower grade 2.5 meters or 2.5% over 61.3 meters. So very strong intercept to start off the program, and now was an infill hole within some gaps in the current model. And lastly, as I mentioned, one of our other objectives is testing that north bedrock interface and determining whether or not there is open pit bulk tonnage potential to highlight this underground, or to complement this underground deposit. So some opportunities that we see on the deposit. This resource was done at a lot lower commodity prices, $5,500 per ton copper, $1,200 gold, $16 per ounce silver. So we are working on an updated internal resource exploration model that we're able to take into consideration where the updated boundaries of this deposit is, incorporate that within our exploration model in order to continue to drill this out cost efficiently and get a good understanding of what we have there today before we even add on meters to the deposit. We also believe that the density could have been understated in this initial resource. We are working through an assessment of determining what that correct density could be and what that means for the deposit.
When you say you're working on the internal resource with these updated metrics, that is just for your internal modeling to say, okay, these are maybe valuable zones. That wouldn't be in the near term for a new published resource estimate, would it? Or
it could be. I think our approach on that is we believe that a company should always have a handle of their numbers internally, and then that way we can ensure that we're delivering on our grade and tonnage goals within our drill programs. But I also think as well that monitoring the numbers internally, we can if we're getting rewarded on our drilling and other developments, then great. But if we see a disconnect at any point between the internal resource numbers and our market cap, we'll be able to quickly bring that out to the market. So I think the main thing is we'll have a good handle on our numbers and ensure we bring out an updated resource when it's going to create value for shareholders.
Okay.
So looking at the deposit, we have a copper gold stringer zone with a parallel, more typical VMS massive sulfide zinc silver that occurs on the section shown at depth, but it does vary across the deposit. So this has a non-continuous strike length of 1.6 kilometers, a continuous strike length of 1 kilometer, and it's been drilled down to a depth of 850 meters as of today. So a very significant footprint that we're starting with, that both is open for expansion, but also for meaningful info, and I'll get into that in the next slide. So looking at and getting back to our bigger picture of what is our strategy for the year as a whole. As I mentioned, that we're focused on drilling the first 300 meters vertical this quarter to really build on our what we've outlined to the market, testing 2 extension targets on either side, filling in gaps in the model, focused on some of the high-grade lenses, and then testing the North Bedrock interface. But we believe that program, combined with our updated modeling, will give us a good handle on chasing these lenses to depth. I think the important question has been answered in the historical drilling. Does this continue down to depth? And it has been proven. You look at 236, 248 spread out amongst that 1 kilometer strike length, and these are the higher grade intervals of lower grade hits. So they've answered that question, but really the majority of this resource is hosted within the first 300 meters vertical. Then there's a large zone to drill between 300 meters and 850 in terms of infilling this deposit and building up what the true resource potential is. So I think Q3 and Q4, we're going to move from shallow drilling to focusing on the 400 to 850 meter vertical, drilling pilot holes with wedges to basically infill this gap that you see here cost efficiently, and also to test the expansion potential outside of that. And then looking to a third phase this year, drilling some deeper holes to follow up on the 236, 248 drill holes that really are define the boundary of the deposit at depth, but it's really limited by no further follow-up drilling that's been done there to date.
Sir,
yeah.
Sir, going back to your option agreement with SOQUEM, is it just so many dollars in the ground to develop it, or do they have any parameters on you have to put it in certain areas? And I guess in addition to that, are you working or in conversation with SOQUEM that use their historical expertise, and you are partners at this point? Are they giving advice or commentary on sort of best strategies going forward?
Yeah, so I think the agreement as a whole, as you mentioned, it's a work commitment of $14.5 million over 7 years. We're going to be able to clear that option agreement and that obligation by the end of 2025. So we're in a great position and well ahead of our obligations at the project. But in terms of we're in constant communication with our partners. They've been great, and we certainly always open up for their feedback. But as I mentioned, we're starting with a very strong database that has made our job easier. So we appreciate all the input that they do provide, and they're a great partner and really key to where this project is today. So we value all of their input at the project. But yeah, I think we'll be financed to complete this 7-year option agreement. That'll include approximately 50,000 meters of drilling between 2024 and 2025. So that will make us one of the most active juniors in the province of Quebec, especially with a property of this merit, and also outlining the plans and getting caught up. There's a lot of news and a lot of things that we have to do to highlight the potential at B26 there today. But then to take it a step further, to highlight our Q1 drilling, highlight some of our other strategic modeling and growth that we see at the project, and then continue to outlay what will be a continuous drill program throughout the rest of the year.
Okay.
But I guess maybe just getting back to the drill results that we've released to date to provide some context and what it means for the deposit and what we're doing. So 293 and 294 we announced and provided the full intercepts last week. So the significance of 293 is we duplicated a hole that was drilled by BHP and ended at 140. We extended that out to 300 meters, and in comparison, we had 3 times the grade of what was historically reported, which we're looking into. What does that mean? We ran 2 different sampling methods for acid peroxide fusion so that we could compare to ensure that our numbers were accurate. But we have to go back to historical data to see, does this open up an opportunity? One of the things that was recommended in the 43-101 for further investigation was that they didn't believe that the drill core was crushed fine enough, and that some of the gold specifically, and potentially copper, could have been held in the sulfide. So in response to that, we've crushed 95% running 1.7 millimeters. So in these initial results, we have seen an increase in grade. It's still preliminary to determine if this is pervasive across the deposit, but it is something that we're following up and we have the historical core to go back and quarter split and have an apples to apples comparison to see if there is a percentage increase in the grade as a result of this different prep method. But it's something that was significant for us to investigate and highlight from these initial drill results. 294 was drilled about 20-25 meters down dip to fill a 70-meter gap in the model of 293, and we've seen one of the highest grade intercepts in the deposit, especially with a stronger gold hit within that. So we do believe that overall the gold potential on this asset is underexplored. We have modeled the gold specifically in this deposit to uncover some higher grade trends that we will follow up in Q3 as we drill this to depth. So I think it's another opportunity that we're starting to highlight within our current drill program. 295, 296 were holes that tested the northern bedrock interface, and that was highlighted by about 5.2% copper equivalent over about 46 meters combined of the two intervals in hole 295. So that, again, is delivering on one of the two objectives that we have in determining if there's a low-grade bulk tonnage potential around this high-grade core. So although those holes were lower grade, they did deliver on the objective that we were testing and really looking at the disseminated material outside of this high-grade core. So looking at the two zones and what the mineralization looked like, so we have the copper gold zone on the right, and then we have the more typical VMS, massive sulfide, zinc, silver on the left. So majority of the value and where we're focusing our drill efforts is on the copper gold. That hosts about 8.8 million tons of the resource as of today. But the zinc silver is not an immaterial zone. It hosts 11 million ounces of silver with a significant zinc component. So it's something that I think we've clipped in some areas within our current drill program, but it's something that will be a secondary objective to the copper gold zone. So this is sort of the technical setting that the B26 deposit is hosted on. This is a mafic volcanic setting, similar to some of the other contexts of the larger deposits in Quebec. But really, the deposit is open. We're working to show that growth potential, but also building a 3D model that will release to the market that we're able to publish drill results against, show the growth potential, and basically deliver against as we continue to scale up our drilling and help support with a credible approach the growth potential here. So part of our overall strategy is bringing in a strong 3D model that we're able to publish drill results against and really show the expansion potential to the market, that hopefully that the market could get ahead of itself and allow analysts to make their own numbers of what the potential at the asset is. So yeah, we talked a bit about the agreement earlier. Really, we think a strong partnership approach. We really appreciate the trust that and the opportunity that SOCOM has given us to highlight an asset that's never been in a public company. So we really do think this is an extremely rare opportunity to start with a deposit of this magnitude and really pair it with a strong team and financing that we've been really to grow this aggressively, even only after 5 months of having the option on this asset. So really to sum up, I think the opportunity before we just spend a minute on Beschefer and then go into our cap structure and makeup of our team. So really looking at the economics, the deposit as it sits today is about a quarter of the size of the Selby mine. But the Selby mine is a good example of the growth potential, especially 7 kilometers away, of these polymetallic deposits within the province of Quebec, especially within that immediate area. And as I mentioned, the Selby mine produced 53 million tons over 20 years and supports potential of this being a large development with both potentially open pit and underground potential. We benefit from having good supporting mining infrastructure in place, including the power line. 2018 resource, as I mentioned, was done at a lot lower commodity prices. So we do have the improvement coming out of the gate and reassessing what the impact of today's commodity prices is on the deposit. Metallurgical testing in 2018 was strong with about 98% recovery on the copper gold and 96% on the zinc silver. So again, addressing a lot of the too good to be true red flag questions that we get and so a lot of the hard work that was done by the previous operators have started to de-risk some of those questions. But yeah, so a lot of leverage with the contained metal within what we believe is just the start of a very strong gold and copper and precious metal market. So that's why we're very excited, especially to be fully funded and be one of the most active companies in the province of Quebec, which opens up a lot of opportunities in what is still an overall soft market. So just touching on Beschefer for a minute, because we are going to be drilling there over the next week or two. So this is an asset that we optioned off of Wallbridge in 2021. As a operator Abitibi, we've drilled 9,000 meters at the project, headlined by 4.92 grams per ton over 28.65 meters. So it's certainly our value driver today is B26, but we do think that this is a strong complementary asset that we expect to have some good news flow and catalyst from over the coming months as we drill and complete our option agreement with Wallbridge, which will be a total of 4,000 meters of drilling this year, which will earn 100% of the Beschefer Gold Project. So we have 4 zoned modeled over down dip of 600 meters and a strike of around 800 to 1 kilometer. So it's, as I mentioned, a good complementary asset, smaller scale than B26, but something that we will be delivering news from in the coming months.
On the Beschefer project, what are call them synergies between the two projects? Is it just sort of more of a diversified portfolio, or can they help each other out?
Yeah, it's a good question. I think that it's something that we're early in the process, but it's part of what we're considering, whether or not there's a central play on having 2 nearby deposits within the camp. So it's something that we're early on. I think that Bestfor is earlier stage to seriously consider that at this point, but I think it's something that we'll look to down the road as we see what the best move is within the camp as a whole.
All right.
So looking at our cap structure, so we've been able to complete the financings without any warrant, I think, which is quite rare in this market and speaks to the value proposition that we're putting together for investors. So we have 98 million, I guess, 99 million with some convertibles, final convertibles that came in, and really fully diluted around 101 million with 13 million in the bank as of today. Still very well aligned with 20% ownership for myself and management team on SEDI, further ownership on the family office of around 15%. And then we have a strong makeup of strategic high net worth shareholders that took down the financing in December, led by Frank Justra and Greg Shimandi, amongst some other strategics that we haven't been able to name as of today. So very strong cap structure, and I think we're well positioned to highlight what is just the beginning of an exciting story of B26. So looking at our team, so Stephen leads our grassroots exploration outside of, including Beschefer and some of our other opportunities outside of B26 and Beschefer. But looking at the core of our advanced stage exploration team, so we have Martin Demers that leads the technical work at B26. He was a senior geologist that oversaw the development of the Casper mine that's 40 kilometers to the southwest of B26. That development led to the takeover by Hecla in 2013 for 800 million. So he's had success in this camp before, knows this area of the Abitibi very well. Then we also have Eric Callio on our advisory team with his long success at Kirkland Lake Gold, at Detour and various deposits within his career. And then we have Shane Williams, that was a VP at El Dorado and oversaw the development from PEA to a fully operational mine in 18 months at the Lamaque Gold Project on the Cadillac Break. So I think I think this is a start of additions to our team. I think that you really do have to have a world-class asset to attract a world-class team, and that's part of our goal as we build out operationally, but operationally, financially, and our team. So I think we'll have other additions to the team to come, but we have an excellent team today and great contractors that have supported us scaling up as quick as we have. So I think that that covers it. Again, I appreciate everybody's time today, and maybe I'll turn it over to yourself, Martin, and any other questions that we have today.
All right. Thank you. That was a great presentation. I appreciate that. Your Where do you like to, I guess, get into a bit of arm waving here? You've got some sort of blue sky potential on the project. It's open in a lot of directions, and you think there's a chance for a new discovery on there as well. Can you just sort of summarize what those blue sky potentials are, and which ones do you think are, I don't know if you can say the most likely, or which you're most optimistic about?
Yeah, so I think that really there's a lot to highlight within our plans, and we're gonna do, and there's a lot of news flow for us to bring out to the market to really cap showcase the opportunity today and the opportunity to come. So I think initially some of the easy opportunities is to revisit the commodity prices on the deposit, evaluate and challenge the historical density that was used at the project. But then looking at then the next step is looking at the deposit as a whole, and where we can infill and where we could build tonnage. And really that looking at the potential between the 300 to 400 meter vertical mark and where this has been drilled down to depth at 850, it opens up a large area to infill that has been constrained by drill density as of today. So I think Q2 and Q3, where we start to drill this at depth, will be important in illustrating to the market a growth model, and then being able to deliver against that. I think that will help show the resource upside within the current mineralized boundaries of the deposit as of today, and also continuously work to step out, whether it's at surface or in the mid 400 to 800 or at depth. So this is all objectives within a larger plan for this year, but we've done it in an order to try to get value for shareholders at each stage, getting value within the first 300 meters before we have to undertake the more expensive 400 to 800, and then again moving down to chasing this at depth. So we're trying to do this in order of where we think we can create value and continue to build for shareholders, but also continue to meet our different valuation goals, and also looking at other strategic opportunities that we could be in a position in as a performing junior in this tough market. So I think to circle back to your question, I think the growth potential is broken down with reassessing the current resource, having a strong infill strategy to build on the tonnage within the current mineralized boundaries, and then stepping out on the deposit, which we started to within this program, but will continue in Q2 and the rest of the year.
Gotcha. We've got a couple questions here from the audience, and I'll sort of amalgamate them all here. On the historical drill results, there's one comment of 89.5 meters at 2.32 copper. And I think you had mentioned you dropped the name BHP, or maybe it was one of the other majors before SOQUEM. Like for how long has this project been drilled, and how old are some of the historic drill holes on the project? If you can give a little bit of history of the project.
Yeah, so BHP drilled some very limited shallow holes within this project when they were drilling the entire contact to try to find additional mill feed for Sal Bay. So, but the vast majority of the drilling and the material discovery was made by SOQUEM in 1997. So we have access to the vast majority of that historical core that was drilled by SOQUEM. But really the BHP drilling was limited. It was done with shallow holes. And as I said, the majority of the drilling and development was done by SOQUEM.
Okay. There are, and I'm gonna mash them all together here, lots of questions on the option agreement. Could you get it bigger than 80%? Is there any chance, like, could things get renegotiated? I guess on bigger than 80%, once it turns into a JV where it's 80-20, if one party doesn't sort of fulfill their commitment, you can kind of grow your portion of it. Could you generally comment on the option agreement some more?
Yeah, so the option agreement, as it's stated today, is an 80-20 split. So when we complete our obligations that are outlined on the slide shown here, Abitibi would earn 80% interest in the project, 20% would be held by SOQUEM, and each party would have to carry their percentage of the future expenditures. Um, and and if for some reason SOQUEM was not didn't choose to do that, they would be diluted down to 10% ownership, which would then convert to a 2% with a 1% buyback right for 2 million. So I think SOQUEM are great partners, and I think that they're viewed as a strength in this agreement with their technical expertise and then everything they bring to the table. Now, could it be an objective of ours to look at this agreement for 100%? Potentially. But I think even if we're unable to meet that objective, we view this as a very strong partnership, and we do value them as a 20% partner. But we'll see what happens down the road.
All right. And I guess with BHP and SOQUEM, someone's asking, can you just refresh how many meters drilled, how many drill holes and meters have they put in? And can you put sort of an estimated value on the work they've, maybe in current dollars equivalent or historic dollars, of how much money has been put into this project to date prior to your participation?
Yeah, so the 2018 resource was made up of about 115,000 meters of drilling across 254 drill holes. So I think where we estimate, I think this was around $25 million of exploration work at minimum. And that's over the course. I think in today's pricing, it would be quite a bit more than that. So we're able to capitalize off of all that investment, and as I mentioned, the strong database that was assembled by their team. So yeah, we're starting with an asset that has had considerable investment, and we'll now be financed to complete an additional 15 million by the end of next year.
All right. And getting back to maybe some arm waving and speculation and forward-looking statements, someone asking, with so far you've got 11.4 million tons at 2.95 copper equivalent. Theoretically, if some of your modeling back of the envelope stuff, and I'll say what they're saying, could this be a 15 million ton, 25, 35, any conceptual speculating you could do on that?
Yeah, I think it's something that we're working to bring out to the market. I think that it's hard for me to put a number today on it, but what I'll say is we do see significant upside in the deposit. You look at the change, and you look at SOQUEM's resource that was released in 2018, and even just dropping the cutoff by 20%, I believe brought the resource up to around 15 million tons at that time. So I think that we see a lot of upside within the project. We've run the numbers internally, which we're extremely excited about. Too early to try to put a number out to the market on that, but because of the strength of what we've run internally is part of why we're running an internal resource, we're running an updated exploration model, and we're trying to consider how do we highlight this growth potential credibly to the market, because we believe if we're able to highlight that and deliver against it, if we're able to substantiate our estimates, then the market could continue to reward us on the basis of that potential. So we just have to be careful with how we bring that out, because we want to bring it out credibly and not too early. So it's something that we're working on at the moment.
Makes sense. On the current financing, someone's asking if it's been fully allocated yet. And then as well, is this mostly a retail offering with retail participation, or is it mostly institutional or a mix of thereof?
So it has been fully allocated. It is a makeup, I guess the majority of it has been participation again from our strict shareholders from the December financings. So we do have a bit of an institutional component, but it's largely, excuse me, a makeup of high net worth and strategic groups that have participated in the past.
All right. You mentioned part of your strategy in raising all or almost all of the funds you're going to need for the option agreement. Now it puts you in a stronger negotiating position for other parties, as you don't need anyone for now. What kinds of deals or participations or partnerships or buyouts or whatever would you kind of consider at this point? Do you need anyone else's help at this point, or do more land package within the area? What kind of options for you there do you potentially have?
Yeah, so I think that we have the opportunity to be well financed and well structured in an overall tough junior mining market. So we do want to grow to continue to be to aim to be one of the larger juniors in Quebec. And especially if we're able to keep delivering on our drilling and various other aspects within the B26 deposit, and that we're able to continue to grow on our valuation basis, we think that there would be a missed opportunity not to look at M&A, where we get on the aggressor to look at other opportunities, whether that's an asset or a company. So we're not going to do that at all costs. We do believe that B26 on its own is a company making asset, but we do recognize the opportunity that we have today. And we are looking at various items that would be complementary to our current the current company, the current asset makeup that we do have. But as I said, we're not going to do that at all costs, because we don't want to dilute ourselves as largest shareholders at management and also our investors' exposure to B26. So we're going to be careful in ensuring that any opportunities that we consider are beneficial for our shareholders, because we do believe that B26 on its own will be very significant for us. But I think we'd be missing an opportunity if we didn't look to grow through potential M&A. So we're going to be careful in our consideration to ensure that the numbers make sense, that that the deal makes sense, protecting what we have today at the company.
Gotcha. There is a question here from the audience. There's no chance for SOQUEM to renegotiate the terms, trying to get more out of it now. That's a lockdown deal. The terms are the terms, correct?
Yes, the deal is set and financed. So it's a strong partnership, but we just have to fill our obligations, and we will earn 50% after the 4-year obligations, and then 80% after going out to the obligations required by year 7.
All right. And another question asking you to put on your speculation hat here. What majors might be interested in partnering or acquiring AMQ? Are there any obvious neighbors you have where it would be highly synergistic, say?
Well, I think I can't speak to specific majors, but I think I can say that the demand for a polymetallic deposit within Quebec is high, especially if we're able to deliver on the growth goals that we have for this year. So I think there's a collection of majors that we believe and think down the road will be interested in looking at this opportunity. But we still have a long ways to go in getting value for our shareholders before we need to go down that route. So we're in a position of strength to have those conversations, given that we're funded for approximately, after this financing closed, 50,000 meters of drilling. And really what that could do for the company in this deposit is in our view quite significant. So I think we're in a position of strength to have those conversations over the coming months and years as we develop this. But in my opinion, I think there will be various parties that could be interested in this opportunity, especially if we deliver on our growth plans.
Gotcha. There's a question here if any analyst reports are coming out soon, and I guess to expand that, are you taking a lot of calls from bankers and the likes? You've been basically doing these financings yourselves without a big institution helping you out. Is there plans to partner and get some research and everything that goes along with that?
Yeah, so I can't speak to yet who it is or the firm, but we do have one analyst starting with a site visit over the coming weeks. Where that leads to, I'm not sure as of now, but we have had a lot of interest, and our goal is to have coverage within this year by the end of 2024. So it's just, yeah, I don't know the exact timing over that, but there's certainly been quite a bit of interest.
Gotcha. And there's a question here on any opportunity for listing your shares in other exchanges or in other markets.
Yeah, we've been reviewing that, and it's something that we are considering, and where exactly we would go is still to be determined. Um, but yeah, we recently listed on the OTCQB. We do qualify for the QX if it made sense for us. We have considered going over to the TSX venture. The CSV has been extremely supportive of us and really been a big part of getting us to where we are today. So we don't have any firm plans, but at the end of the day, we'll continue to make decisions in the best interest of our shareholders. And if it makes sense for a specific purpose, we have all the options at our disposal.
All right. Are you going to stay focused on like copper type projects, or there's a question here, would you consider lithium or uranium or other sort of non-copperish assets?
So we would never look at uranium or lithium. We wouldn't consider any opportunities within those industries and elements. So we're really focused on polymetallic with gold upside. And we think that that's where a lot of long-term value will be created in this cycle. And that's the type of opportunities that we're considering.
All right. That makes sense. I'm glad you answered it that way. Is there an opportunity to utilize the old Selbay mine mill and infrastructure? Any sort of assets around the area that you could help you out in your development?
So the Selbay mill, unfortunately, was dismantled, but we do still have some of the supporting infrastructure, like the power line and some of the infrastructure that was built around the mill. So there is a mill in Matagami, there's a mill at Casperarty, so there is nearby mills that may make sense, but yeah, we have some of that supporting infrastructure, but not the mill right next door.
All right. I noticed this question from the audience. I noticed the xylem discovery from SOQUEM is identified on your map in the presentation. Have you discussed this discovery with SOQUEM?
Yeah, I think it's an exciting discovery, and also shows the potential, and that this contact that we're on is very underexplored, and I think there'll be numerous discoveries to come in this cycle, as we see a lot of investment capital focus on this area. And you look at the Cadillac break versus this area, and this is still a very unknown belt. So it's an exciting new discovery by SOQUEM, and we're certainly keeping an eye on it, and hoping that they're able to expand on that. But again, as I mentioned, it just shows the potential of the area as a whole, and I think a lot more to come.
All right. Well, we're almost up to an hour here. I think it's been very in-depth. I really appreciate your time. Before we wrap it up, is there anything, any sort of tie a bow on it, so to speak, any highlights you want to mention before we close it up?
Well, I think the main thing is to thank our shareholders. We wouldn't be in the position today without their support, and whether it's the private placements or the open market, we've had a lot of good shareholders come into the name that recognize the value and the business plan that we're putting forward at B26. So I think that would be the main thing. We recognize we're in a tough market. There's a lot of juniors competing for capital, so we appreciate the support that we are getting in the market, and we will continue to be transparent with our plans and deliver on the objectives that we outlay for shareholders. So I think that we are at the turn of what I think is going to be a much better mining market. And I think we're positioning the company to compete amongst the largest juniors in the province of Quebec. So I think we're laying the groundwork with an impressive starting deposit, that I think will will only accelerate in the market that's coming. So we're very excited about the prospects, are the ongoing drilling. We've only reported 4 of over 40 holes drilled to date. So lots of news flow on the project as a whole. Some of the complementary geophysics that we're going to be doing to better target this. So lots of news flow. But again, appreciate everybody's support and happy. Please reach out to us at info@abitibimetals.com if you have any questions. And yeah, and I'll turn it over to you, Martin, if you have any other questions. But we're certainly excited about what we've accomplished in 5 months and what's to come at the project and company.
Yes. I guess on the news flow with the drills you've already drilled and then your upcoming, what's the cadence going to be of that news release? Are you going to bunch a whole bunch together and drop a lot, or sort of trickle it out over weeks? How are you going to structure that news flow?
So we're hoping to have results at a minimum every 2 weeks. So we're going to be, I guess, bucketing different groups of holes based on their significance and location, but also we'll have other news flow out in between. So there's a lot going on behind the scenes at the company, and we're looking at how to best package that news flow up and distribute it to our shareholders. So, but we will have continuous results over probably the next 2 months or 3 months. And then by that time, we'll be right back into another drill program. So it'll be a continuous narrative this year.
Excellent. Well, with that, we'll wrap it up. Jon, that was great. Thank you very much. Thanks for taking the time. I hopefully will get you back here and you can make commentary on the progression as things proceed on your projects. Thank you.
Yeah, I appreciate you having me, and thanks again, everybody, for your time today.